Shares of Lodha developers fall over 5%, and we have Oberoi Realty as well trading with cut for both companies. Equity is exchanged. Sources say existing investors sold stake in both companies.
Dixon Technologies trades higher on the back of a steady quarter in June. The profits rise 68%. The revenue is nearly double. The management tells CNBC-TV18 the order book looks healthy and guides for 40 to 45% revenue growth in FY26.
Shares of Idea Forge trade with cuts of over 5% after reporting an 85% dip in revenue year over year. The company has also reported loss for the last 4 quarters.
Cyan DLM trades lower after reporting its first quarter revenue and profit, which missed the street expectations, even though margins expanded.
IRFC trades higher on the back of its June quarter numbers. The company reported its highest ever revenue, while profit nearly rose 11% year on year.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel. With me is Mangalam. In the markets, though we're trading high with a gain of around 50 points, maybe your portfolio is not looking that great because the mid-cap index actually has come in for some profit-taking. Nothing too much to worry about, but I think the street is waiting for further clarity with regard to Trump's tariffs on India and also earnings season. Looking for a positive surprise, can Infosys provide that positive trigger? Hey, Mangalam.
We'll watch out for how Infosys does, but some of the earnings are fairly well received by the street. Case in point, Dixon Tech, it's moved to the high point of trade. Was a good set that came in. The street was expecting a good set, but I guess the management commentary and the outlook has the street excited. That stock's moved to the high point of trade. Whirlpool is the other one which is spiking right now as we speak. And alongside that, we have Biocon, which too has moved to the high point of trade. So there are a few stocks which are doing well currently in the green as against a lot more which are in the red. And Apollo Hospitals from the frontline end also moving higher. But by and large, the market still in that range of 24,950 to around 25,250 thereabouts. Dharmesh Shah of ICICI Securities joins in for a quick technical check on the market. Dharmesh, we find buying at the lower levels, we find some resistance at the higher levels. For how long will this band continue, and what will it take for the band to actually move?
Good morning, Mangalam. Yes, definitely. If you look at the market, I think since last 3 to 4 trading sessions, we seems to be finding the resistance around the 20-day moving average. But going forward, we believe, I think the way the technical setup seems to be forming, it seems to be the way we move from 24,500 to almost 25,700. It looks like it's a slower pace of retracement happening on the Nifty. So indicating, I think, the robust price structure. Now, the question is whether we see the directional move. Yes, definitely, I think so. The way the VIX seems to be trading at 10.75, it looks like, I think so, we are near some bit of a big directional moves. Maybe in the next week, we should see some directional moves for the Nifty. But overall, if you look at the technical setup, it looks like the market breadth, again, a good indicator to understand the market sentiment. Currently, the total CNX 500, total stocks, around 65% of the stocks are trading about 200-day moving average compared to 50% of the last month. So even after we have seen a 3% cut in the Nifty, the market bet seems to be improving. So overall, the technical setup looks more positive. Maybe buy the dip should be the strategy going forward, with 24,500 to 24,700 remains to be the strong support. But we expect Nifty to head towards 25,700 to 25,800 in the coming few weeks.
Got it. Hi, Dharmesh. Good to see you in. Let's get to individual stocks then, because it's a stock-specific market. What's in your radar?
Yeah, so as far as stock-specific is concerned, Nigel, it looks like, I think the power space looks positive. Among the power space, JSW Energy is something which we like. I think so the more of a stock has already witnessed a symmetrical triangle breakout supported by 50-day moving average supporting. I think so the way the volume seems to be setting up for JSW Energy, it looks like it should be looked for a target of around 572, keeping a stop loss of 495. So JSW is one which we like. Apart from JSW Energy, we also like PFC Power Finance. Now, again, Power Finance, a falling trendline breakout of last 7 months of corrective phase and sustaining above 100-week moving average. Looks like, I think so, Power Finance should be looked for a target from 478, keeping a stop loss of 388. So PFC and JSW Energy remains to be a top pick.
All right, we take that point. Thank you so much for joining in, Dharmesh, and giving us your views on the market. Just keep an eye out on a couple of these stocks before we move forward. We have Bajaj Auto, which has moved higher. And from the broader markets, a couple of stocks which are worth mentioning right now, the ones which are spiking along. Bombay Dyeing up 10.5%. on that counter. And SML Isuzu, for the last two trading sessions, has been continuously moving higher. In fact, post it reported its numbers, the stock has rallied about 18% odd itself. With that, let's get you an important programming note. We talk about the workplace as it transforms, so must leadership. In the Bengaluru edition of Future Female Forward, Season 3, India's top business leaders gather to reimagine what inclusive leadership looks like, how women are powering the future of work, capital and innovation. You can catch it live on July 29, 5:30 p.m. onwards, only on CNBC TV18, CNBC-TV18.com and our YouTube channel.
Welcome back. You're tuned into Chartbusters here on CNBC TV18. Well, the company that's on our radar is Saga Cement. They reported a strong showing in the first quarter, good pricing, good execution, and it came on a weak base. Now, they reported a profit after 4 consecutive quarters of losses. Mr. Srikanth Reddy, the Joint Managing Director of Saga Cement, joins us on the show. Hi, Mr. Reddy. Good morning. Thanks a lot for joining on the show. We would request you to actually join us more often. But it's a good time that you're joining in because the numbers have been fairly good. And I think I understand that you're joining in from your Andra Cement plant, if I'm not mistaken. But good to see you have good connectivity. Now, a couple of points out here. You know, the street has always said Saga Cement, there is good value out there on an EV per ton basis. Good promoter as well, good pedigree. The problem is delivery. Now, for this year, tell us what kind of volume number are you going to deliver, which you're confident about. And also tell us on an EBITDA per ton, you've done 850 rupees per ton. Looks quite good, but now input costs have moved up a little bit. You have the monsoon season that will be a bit of a dampener as well. Steady state, what kind of EBITDA number should we work with on an average for the year?
Yeah, good morning, Mr. Nigel. Thank you again for hosting us. I think it has been a long overdue kind of performance from us. Of course, last 2 years was tough. One, the market pricing was relatively lower. And at the same time, we doubled our capacity from close to 5.5 million to 10.75 million over last 2 years. So most of the ramp-ups happened during last 2 years. I think on the expected lines, the cycle changed, the demand cycle, and so is the price cycle. So that helped us to perform relatively better. But I think we are yet to catch up with the best cycle, which we believe is yet to come, because most of the neighborhood, especially Amaravati and Andhra and Telangana demand, likely to pick up from here on. So that should help us perform even better than what we have done so far. In the current year, we believe that we could do close to 6 million tons. With an EBITDA on an average at around 600 to 650 rupees EBITDA per ton kind of a number, Mr. Nigel.
600 and 650. The first quarter you did about 851, and you believe that going forward prices will only improve from here on. So what stops you from doing at least 800 to 850?
Yeah, internally, again, I need to pencil in something with a lot more realistic kind of numbers. Of course, in the first quarter, we also did receive an incentive, which is almost close to 32 crores of it. So that also helped us to show a better number. But we are trying to be, realistic in terms of 600 to 650 is definitely achievable.
So
we don't see a challenge with the pricing environment, but I think we need to be cautious too, right?
Yeah, I understand that. So all things considered, close to 400 to 420 crore EBITDA for this year is a relative possibility here, right?
Yes, sir. I think those numbers look doable realistically.
Got it. All right. A quick question, sir, in terms of capacity. As you said, the last few years, you've steadily increased your capacity. And from being a marginal player, now you're a relatively larger player. In your core market, what is your current market share? And where do you see that number headed? And in terms of absolute capacity as well, from around 10.5 million tons, where do you want to go?
Yeah, the stated goal for us from a medium to long-term perspective is to double every 10 years. So the indicated number was to reach 10 million by 25, which we could achieve slightly ahead of time. So the immediate target is to reach 12 million by FY27 and 15 million by FY30. and by FY35 to reach to 20 million, Mr. Nigel. That's the stated goal. At the same time, though the market share is not a big KPI for us internally, but fortunately, we are one among the top 4 players in the markets that we operate, especially the AP and Telangana. Yeah, we are one among the top 4 to 5 players, Mr. Nigel.
Things are heating up in AP and Telangana. You are increasing your capacity, etc. as well. How much of this planned capacity increase would be organic and how much of that would be inorganic?
Yeah, I think Andra, post acquisition of Andra, sir, we are currently expanding from a 2.25 million to 3 million. The first part of the expansion is likely to be completed before 30th of September. 0.75 million ton grinding capacity to be added either end of Q4 current year to the middle of Q1 next year. So that would be, I mean, this is purely a brownfield kind of an expansion at Andra. And as you know, Andra is more an acquisition for us. We did acquire Andra close to 2.5 years back. So most of it, except for Matampally, rest of all our assets in the entire portfolio has come through M&A.
Okay.
So this 30 million also happens through M&A only, is what we are saying.
I think up to 15 million, we are very clear it is going to be mostly on brownfield. Yeah, beyond that, we need to really strategize as we come close to that milestone of 2030.
Okay. All right. Mr. Reddy, let's get to the chase then. Let's go straight to that. Since you spoke about Andra Cement, what if someone gives you, Mr. Reddy, a good valuation and says, Mr. Reddy, we want some presence in Andra, and you have turned around the asset. If they write a check, how big the check has to be to make you sell that asset?
I think it's yeah, we are in business, Mr. Nigel. I think that is something which is very relative. It was a strategic acquisition from our side.
Correct.
Fortunately, the asset turned out extremely well.
Yeah.
There were many positive surprises from what we have expected to what it is, especially on the resource side.
Yeah.
When we started looking at this asset from an NCLT perspective, from then to now, we expected some amount of increase in terms of resources. But fortunately, since we started getting into detailed prospecting, the resources turned out to be a very, very positive surprise. And secondly, the asset ramp up is happening at a pace and a quality of kind of an asset. We believe that this would be one of the best assets in the market.
Mr. Reddy, phenomenal turnaround, everything, resources good. Will you sell it? You know, if there is a good, if someone gives you a good enough, I think what you bought it at, if you could, I mean, if you could help us jog back the memory, I think you bought it at $25-30 per ton. You could help me out with the number. What if someone gives you, say, $80 per ton? Will you be a seller?
No, I think at 80, less than 100, I don't think we would look at any of those discussions, sir.
So at 100, you're a seller.
More than 100, you will sell, right?
No, anything beyond, again, it's something which we have to see how the discussions are going to happen.
No, but you are in business, sir. So you wouldn't buy an asset just to turn it around and flip it over for a much higher price, or would you consider that if that was to happen?
No, that never happened in the past, sir. But But
now things are heating up, right? People are eyeing Andra. They are looking at Andra as a potential, and in there you've turned this business around. Over $100 per ton is something that is attractive. At least people can get to the table, right?
I think beyond 100, we would then start discussing with our internal stakeholders, sir. But less than that, I don't think we are engaging in any way.
Okay.
Okay. Has anyone made an offer?
Has anyone made an offer, sir?
See, I don't think we have any offer on the table, Mr. Nigel.
Got it. Okay, so that's out of the way then. We'll get back to Andra. I have a few more questions. But since you're talking about increasing capacity and suddenly Deccan Cement, we are here on the opposite side of the country, on the west coast. But out there is plenty of buzz for the last many years. Deccan Cement could be on the block, could not be on the block, maybe on the block. Would you consider writing a check to buy Deccan Cement? Does it fit into your scheme of things, or you would avoid it?
I think it's a very good asset, sir. But I think it is not a strategic fit for us, sir.
Not a strategic fit.
Not a strategic fit.
No, because I'll tell you why. Suddenly, South India is heated up. We had the Ultratech management saying that South could be the new North. So there could be some interest out there. What if someone writes a big check for you, sir, and says, I want to buy the full of Saga Cement? I've asked you this in the past, but would you be a seller?
Yeah, Mr. Nigel, when Holcim themselves sold here, not many people expected. I think it's all something which we have to see as it comes. But we are very close to completing more than half a century of our existence in the business, sir. But we are not very emotive when it comes to the business, but we have to be very realistic in what is likely possible. Yeah, as you know, that we strongly believe that South is a good market. Perceptions apart, that's the reason why we have been investing heavily into some of the asset making itself, Mr. Naija. I would leave the answer there and leave less for you to.
Right, we understand that. The one thing that I've learned over the last few years about North and South is North is a lot more consolidated and South has a lot more fragmented players as well in the cement space. Sir, just a couple of questions before we let you go, sir. One, you said that you are, willing to talk to people if it is over $100 per ton in terms of Andra Cement. Let's not get into what may happen or what may not happen. But would you ever consider the possibility of merging Andra into Sagar, making it one entity itself? Because the shareholders of Sagar can then enjoy that turnaround directly. That's one. And secondly, what does your balance sheet position currently look like? Debt, repayment plans here?
Yeah, now the question is, I think this is 90% owned by Saga Cement, sir. Ideally and technically speaking, it would be good to merge. There were a few issues in the past because this asset we acquired through NCLT. There were certain constraints. We actually kept the minority interest in our mind, and we ensured that all of us would get the benefit out of it. And there are certain other issues which actually kept the merger not a possibility during the NCLT. Okay. But at this point of time, we would be more than happy to merge. But again, there are certain regulatory constraints because, as you know, we need to first comply with the minimum shareholding regulation.
So first, so Mr. Reddy, if I got it correctly, you'll bring the shareholding down first to 75%, and then you could probably look at the merger. Is that correct?
I believe that's what regulation is. So we would first like to comply with the minimum shareholding. Yeah, and would be more than happy to merge at the first instance.
I know the Vizag land that you've got is in process of getting cleared. Keep that aside. What is the rough value for the Vizag land at current estimates?
Andhra definitely has a land of close to 107 acres in Vizag city, sir. This was a 50-year-old kind of an asset which was partly acquired from the government. So at that point of time, the agreements were that we should get government clearance for us to do anything other than putting up the plant there. So given that, we are awaiting for regulatory clearance for us to
sell that land.
No, sell that asset because we are not into real estate. So
five crores per acre is a rough estimate. 5-6 crores.
I think the government reckoner rate at this point of time is around 4.25 crores per acre.
So it could be around 500 crores the overall value of that asset.
Yeah, at around 450, and we have been consistently disclosing to the market that net expected could be somewhere around 350 crores net of the capital gains.
Got it. Take that point. Thank you so much, sir, for joining in. Nigel?
Yeah, that's it. Thanks a lot, Mr. Reddy, for joining in. Join more often. Good set of numbers. We'll track you to all these numbers. Rough estimates suggest close to around 400 crores of EBITDA is what you're penciling in for this year. Take that break, come back, continue our focus on markets.
Welcome back. You're watching us here on Chartbusters. The stock on our radar is MCX. Why is that? Because trading on MCX began with a slight delay in this morning on the back of a technical glitch at the exchange. Whether that's fixed or not, Manisha joins in to tell us more. Manisha.
Well, thank you so much for that. Well, it's a day when, the commodity market traders would have wanted to start on a good note because you've seen silver at all-time highs, gold prices surging, even the metals are doing well. But we did not get to, or the traders did not get to trade in the Indian markets. That is because the exchange started trade instead of 9 a.m. at 10:20 a.m. approximately. So a delay of an hour and 20 minutes there. Well, we did see those updates coming in on the MCX website, telling us on what time the exchange would open. But I have spoken to a lot of brokers since then, and they say that there have been concerns in the last few days where they have seen errors, anomalies coming in from the exchange. Well, today there was a delay in receiving margin reports from MCX is what the brokers tell us, and the member files have seen delay in much of last week as well. The other thing is about available margins and blocked margins, which displayed incorrectly. And then again, brokers tell us that the disaster recovery side in the last couple of days has seen some issues there. Also, when you look at the member payout files from exchanges, they have had amount errors or mismatches as well. Some places the payouts have been more, sometimes less. So clearly there has been excess and gap when it comes to payouts as well. This is all brokers and members telling us right now. And then apart from that, many of the brokers also said that because MCX was not functioning, there was a push from many of the brokers to start trading on NSE commodity segment as well. Now remember, MCX takes or stands with nearly more than 90% of market share when it comes to trading in case of commodities, the non-agro ones, whether it's about energy, precious metals or base metals for that matter. Much of that volume, as I said, 90% of the lion's share goes into MCX, while NSE also has a lot of commodity segment and a lot of commodities listed on their platform. Today was a day that there was a push coming in from brokers to kind of make use of NSE since MCX was not working for more than an hour in the morning.
All right, Manisha, thanks a lot for that. So that's about the MCX technical glitch that took place, but trading has resumed, Manisha says, after an hour of a bit of a problem. But let's look at Colgate before we wrap up on this edition of Chartbusters. Colgate, the stock is under a wee bit of pressure. It's actually lower by about 3%. After having underperformed from its peak, it's down almost 40%. This on the back of poor numbers that came in yesterday, but more importantly, thereafter, the management commentary wasn't very inspiring as well. They expect gradual recovery only to happen in the second half of this year. There was weak demand, high base and higher competitive intensity that impacted their overall business, even as the premium end of the business continued to do well. Brokerage is not very happy with that as well. We've got a couple of downgrades coming in from a lot of the brokers. They've revised target prices lower as well. So HSBC, for instance, has a target price of 2,600, which they've revised lower. And alongside that, we have Goldman Sachs as well, which estimates that the volume decline has been close to around 3 to 4%. And there is structural weakness in the overall business. The only buyer on the stock is Nuvama, which has a target price a little over 3,100 rupees. They believe that recovery in the second half could come by, even though they expected the first quarter volumes to be lower by about 2%.
All right, Mangalam, that's about Colgate. By the way, there were some flashes at the bottom of your screen. So that's just alerting us on that. There was some relief that came in for SpiceJet. Yes. The Supreme Court has rejected the plea by Maron own KAL Airways, seeking damages of around 1,300 crores. So because of the relief that's coming for SpiceJet, we saw a bit of a spike up. Remember, the stock is a far cry away from the price at which they issued shares at. And the market share losses has been something that's plaguing them. They've turned around the asset a little bit. But this is additional news besides operations that has come at a bit of a relief for investors, up 3.5% as we speak. But we have completely run out of time on Chartbusters. You stay with us. Trading Hour comes up next.